returns from credit sales. Purchase return journal to record the returns from credit purchases. These are the four basics stuff. And then cash book. Remember, all cash transaction, whether cash purchase, cash sales, capital investment by the shareholders, or payment of other expenses, or loan received from the bank, or any cash transactions, we will record it under cash book. Once again, cash book has several different types. One, single column cash book. That's old time. When we didn't have computer, those days, we maintain a separate single column cash book. Second, two column cash book. When the bank transaction started to integrate with the business, we had to maintain a separate column for bank purposes. So that's number two. Number three, there is also something called discount. How can someone define me what is discount? Reducing the original amount. Okay. So next answer is 90. In this case, him. Purchase discount for him, but the same transaction. Understand me? So that is not what I am asking for. There are any other answer I can expect? What do you think? How many types of discount?
Discount on the test.
Discount on returns. That is also related to sales. Heard of? Actually, there are two types of discounts. Exactly. One is trade discount. Other one is cash discount. So you categorize your discounts as to two. One is trade discount. The trade discount is result of the bargaining power. Result of bargaining power. Now, let's say there is a watch. The display price is $1,000. Display price $1,000. The customer walks into the shop. Now, just by customer walking into the shop, can you record the sales?
No.
We can't record the sales, correct? Then the customer will then question the salesman, how much you going to sell this? Can the shop record the sales? No. Then the salesman will reply, the selling price is $1,000. Then the customer will say, oh, too much, I can't pay like this, I expect some price reduction. Then the salesman say, okay, if you are happy to buy at 850, I will buy for it. Then, can you book the sales? What do you think?
If he's ready.
No, after we buy.
It's still, the commitment is not yet arrived. So still you cannot record the sales in the books. So what I want to say, in the transaction, until the time when the sales taking place.
After we pay them.
Of course, yeah, at the time. So during this period, any negotiation taking place on the price, that discount is known as trade discount. In other words, please remember, we are not going to incorporate any double entry for trade discount. There is no double entry for trade discount, but after agreeing this 850, now he is saying, the customer says, look, I don't have money to pay now. I will pay in 2 weeks' time. The shopman also looks into the market and the situation and all that. He said, okay. He give for 2 weeks time period. Then, after giving the transaction over, invoice is issued. So, invoice will look like this. 1,000 minus 150 discount and the net price 850. This is how the invoice will look like. Now after issuing the invoice, so seller says, look my friend, if you pay within next 7 days, I give you 10% discount. This discount is for what purpose? Is it to motivate the customer for commitment of purchase or to encourage the customer for early payment?
Encourage the customer to early payment.
Encourage the customer for early payment. So that type of discount is known as cash discount. And remember, cash discount should be part of the accounting entries. It should go with double entry. So again, the seller and the buyer. In the seller's books, he will record as discount allowed. $85. He is giving additional. So it is what? Expense or an income. And received. And that is income. So, coming back to the discussion of the cash book. So I told you there are third type of cash book, which is 3 column, including the discount column. You record them. We don't need to discuss examples, just keep it in mind. That's how the cash book has. There are 4 type of cash book. Petty cash book. Now, currently in the modern business world, we have bank account and petty cash book. We don't have any others. So what is petty cash now? How much money or how much individual transaction should be managed by cash? Now for some company, paying 50 riyal by cash is too big. For some company, paying 5,000 riyal is considered to be small. So accordingly, they set aside an amount to manage these type of small required trivial expenses. To categorize them, transport, traveling, stationery, tea and coffee, like related expenses. So for that purpose, they separately set aside a float. We call it a float. This float is kept only for that purpose, and any time. Now this is one of the important golden message I can tell you. In any organization, you work as accountant or an auditor. If you are unable to manage your petty cash well, that means that organization is chaos. Because we think petty cash, nothing, small, but people are playing in deep, starting from petty cash. So your control related to petty cash should be very strict. Hope everyone is clear with that message. Another point here, does anyone know what the meaning of the word impressed system?
Impressed.
Not interest, huh? Look the spelling please.
Impressed.
Let's say 1st January 2024. Company decides our petty cash, maximum petty cash amount is 5,000 riyals. Okay? On the 2nd of January, company is in need of a petty cash expense to buy A4 papers. We need to pay 800 riyals. Okay? So, and the company has a practice of reimbursing every week, assume like this. So on 1st of January, they set aside an amount of 5,000. On the 2nd of January, $800 riyals they paid for stationery or A4 papers. On the 4th of January or 7th of January, they paid another 1,500 riyals for tea and coffee. Assume like this. Now, what is the balance cash we have? How much? 2,000? No, 2,300.
Can you change the board?
Hmm?
Turn the board.
Sorry. So I have balance cash. Now how much? 2,700. Now I told you the company practice every week they are reimbursing. Now the petty cashier need to go to the main cashier, ask for some money. How much money he will ask?
What he spent.
What is the expense? And that's from the original amount.
I didn't get you.
For the bills what he have
Yeah.
spent for,
Hmm.
so he will ask for as a reimbursement from
Yeah, if you tell me in numbers, in this example, how much he will ask?
2,300.
2,300. This practice is what you call interest system.
So,
Always remember, total of the bills plus the balance cash in the drawer should be equal to
Out of the
the total.
the float.
That's called the float. Main amount agreed is called.
General journal. So I told you there are 6 type of day books: sales, purchase, sales return, purchase return, cash book, and general journal. What is general journal? To journalize all your transaction which you cannot categorize into above 5 headings: sales, purchase, sales return, and cash book. Good examples: depreciation, provisions, accruals, bad debts provisions. Likewise, whatever transaction you need to pass double entry, which you don't have a prime entry book, then you put it under general journal. This looks like there's a
Pass
debit.
journal entries, no?
Hmm?
You pass journal entries.
Yeah, everyone pass journal entries. So this is the 6th category of debit. After completing in our what you call checkpoints, first checkpoint was source documents. Second checkpoint is day books. Now the third checkpoint is double entry. What do you call that? Do you know the very commonly told story about where he found this law? At which point, which place?
Okay.
There is a, as for my skill of drawing, this is the apple tree. Okay? And then this person sitting here, this Mr. Newton, supposed to be. And then he was sitting and wondering and waiting, and then the apple fallen on his head. Fortunately, this is not a durian tree. I hope everyone knows what is durian. This guy knows?
Yeah, their country have lot of.
Egyptians?
Not Egypt. Philippines.
No, they all have.
You know durian, right?
Yeah, the real this one is in
No,
the-
no. Now the Luca was here, they were also neighborhood of him, and he also want to come up with something, but he don't have a means. He also waiting here, and then he's overseeing what this guy is doing. And then he said that every action has an equal and opposite reaction. Whereas this guy then, after observing this, he came up with something saying every single transaction has a twofold effect: receiving effect and a giving effect. Now the same thing, there is every action has twofold effect. So you sell an item for $10. You sell an item for $10, then can we guess the double entry for this? In the shop's point of view. What he is receiving, as shopman receives what? He receives cash. And then he loses what? The item, inventory. So, here, see, whatever he receives, also it looks like your both hands. The right hand and your left hand. We consider the right hand to be the debit side. As you stand like this in the board, as you are forcing like this, not like this, huh? This way. So this side is debit, this side is credit. So therefore, we receive cash, he debits there, and then he loses inventory, and then therefore we credit to sales. So in this way, he come up with the principles of double entry. For good or bad reason, this guy only put all of us in trouble. we had to remember double entries and then study the rules and all that. So anyhow, double entry is one of the very basic, important principle to ensure all accountants to continue our profession in the right way. And also, sometimes in technically or in accounting theory, we may be wrong. But mathematically, we can still survive if you know to apply the double entry. So please remember that double entry is one of the very important aspect. Now I will just draw down here sales day book, and I have here $1,000. Now we need to incorporate the double entry for this. Now this is day book level. Here there is no entry. We don't pass double entry here. But then we will now move to the next checkpoint, double entry. This is the sales day book. Sales day book meaning credit sales. So what is the double entry that we should pass? Any idea? Okay, before that, I'll give one table. When now to find out the principles of double entry, we need to relate to these four categories. Actually, one more now. Equity. These five categories. In a different discussion, I will be coming and discussing you with something called accounting equation. Can someone tell me what is the accounting equation?
Asset minus liability.
Asset minus
Liability.
okay.
Owner's equity.
Owners equity. Correct.
We can say A equals E plus L. This
Yeah.
is normal equity.
Yeah,
This
this
also
is,
correct.
this is correct. There is nothing wrong in this. But normally we phrase like this. A is equal to E plus L. This is the basic equation. There is a very expanded version of the equation. Can anyone tell me that? Hmm?
What?
No, this is the starting point of the accounting equation. Accounting equation we can expand, and then we will move on to the very expanded. For your information, I have a YouTube channel. This channel I have all these lecture videos in very detail of each of these topics. If anyone interested, please watch that as well. I will share the channel to Mr. Siraj so he can share to you. Anyway, the very expanded equation is non-current asset plus current asset is equal to equity plus profits minus drawings plus capital introduced plus non-current liability plus current liability. This is the like a chemistry here. This is a total equation that every single accountant need to know.
This is balance sheet basically, right? Nothing else. This is
Yeah, this is balance sheet. This is the balance sheet, in fact. Now, using this, I need to come up with an equation for profit. So the profit will be equal to increase in net asset plus drawings minus capital introduced. From an examination point of view, not from practice point of view, knowing this equation guarantees that you get 5 marks. But start where? This is start. From 1, 2, 3. Anyway, coming back to then I want